Now, Oando PLC has posted a strong operational and financial rebound in its 2025 unaudited full-year results, marking its first full year after taking control of former Now joint venture assets. The indigenous energy group reported a 32% jump in production, a return to positive operating cash flow, and a double-digit rise in profit after tax, despite weaker global oil and gas prices. Now, management says the performance reflects a shift from restructuring to execution, with higher upstream volumes, balance sheet cleanup, and a strategic exit from low-margin trading businesses. Join me now to discuss this in more detail is Arise Business Analyst Chika Mbonu. Good morning to you, Mr. Chika. It's great to have you here.
How are you?
Very well, thank you.
A new week.
A new week, yes. New week, fresh news. Let's begin with the key highlights from Oando's 2025 unaudited financial statements. Well, firstly, what should we know about this? And more importantly, how has the Now asset acquisition shaped the overall financial performance here?
When as analysts, we don't just jump into the figures. The analysis actually is like what the story behind the figures. So I will just take 1 or 2 minutes to give you a little background that Oando, for more than three decades now, Oando listed on NGS, Nigeria, and Johannesburg Stock Exchange, has been at the forefront of Nigerian energy evolution. And from a very modest, oil trading company, it's grown up now to become a diversified energy group in Nigeria. And that Oando's evolutionary journey that I said started from 1994, about 30 years now, climaxed in August 2024 when they acquired the Nigerian Oil Company, Nigeria, from ENI of Italy in a $783 million transaction. That transaction moved their participating interest from 20% to about 40% in OML 60, 61, 63, and also moved them into operatorship. It's against this background. You have to review these financials. We, as analysts, knew that the larger part of 2025 will be spent on the ensuring, full integration in the acquisition to achieve the acquisition imperatives before moving to operational efficiency. So if I move now to the figures, I will just say, let's start from the top line, the revenues as usual.
Yes, please.
It declined year to year between 2024 and 2025 by 21%. Now, ordinarily, someone will just, this decline, is it a business downturn or whatever? No, this was an intentional strategic redirection. Basically, as you may know, Oando has about 3 or 4 business segments. One of them is trading. Trading on low margin, white products, finished products, like the PMS, as we call it in Nigeria. But you know that the supply dynamics have changed. Another name I can call that is the coming upstream of Dangote refinery. And that's so they exited strategically from that low margin business and diverted the energy towards their core business now, which is upstream. So as an analyst, I will say the panic would have been for me if there was an issue with the core business of oil production. And that's where we have the good story. Year on year, between 2024 and 2025, there was production moved up by 32% to about 33,500 barrels of oil equivalent per day. And that was substantial. Crude oil moved on by 36%, gas by 24%, and natural gas liquids by 715%. And then they also successfully developed their first development well, completed and producing. And then in achieving all this, they had zero fatalities throughout 2025. So that's the top line. The top line, although fell by about 21%, not because of falling business. It was because of the fact that it exited the low margin selling of PMS, due to the coming stream of the Dangote refinery. But that was more than compensated by as I said, the increase in the production volumes. The next figure, of course, you're going to look concerned with is the profitability. The bottom line improved year on year by about 10% to about $241.3 billion naira. Again, due to the growth in the upstream volumes, as I mentioned before, and then they had, favor was on the side, impairment reversals of 540 billion, and then tax credits of 2.4 billion. But most importantly, Oando have been working on restructuring their balance sheets, the funding structure and stuff like that to reduce the cost of funding. That had a salutary impact on their performance for about 81% lower finance cost. So there's a balance sheet cleanup that was happening in 2025, which again, we're going to have more impact in 2026. The other major aspect of their performance that I think worth mentioning is the cash, what I call cash and liquidity. Silent but very powerful. But cash is king. The life of the flesh is in the blood. The life of the company is liquidity. If you don't have it, you die. Cash balance came to about 380 billion, more than 21% year-on-year growth. Operating cash flow turned positive from a negative of 223 billion in 2024. It came to about 70 billion. They had improved receivable collection. So you can again see there's an intentional movement towards refining the balance sheet. So they stopped the bleeding, but now they're cash positive, which is very important for their business. Of course, I thought about the strategic shift in trading. In the sense I said, even though revenues fell by 21%, I already accounted for that. But the issue was that they deliberately exited the low margin trading business. And then for crude oil trading volume, which is the point I want to make. Remember the trading PMS, the trading crude oil moved up by about 42%. Focus shifted to higher gas that has higher margins and crude oil had higher margins. So in all, you will find that 2025 was a year of starting the milking, pushing from the major imperatives to make sure the acquisition imperatives, make sure it works. And then we'll have a feeling that as we move into 2026, more of that success will come. And the way you know about it is the fact that production in 2025 versus 2024 moved by about 32%.
Absolutely. I mean, quite a myriad of developments there. And against the backdrop of the picture you've painted for us now, it sounds like some very deliberate moves were taken on the part of Oando to, stay afloat or to keep afloat, that is. But following the NAOC acquisition, what major operational or financial challenges emerged? And in what ways were this tackled?
From a minor operator to full operatorship, like almost moving from like, and let me know, it may not sound really this is like a tenant to now moving to a landlord. You carry a lot of responsibilities, a lot of expenditures. We knew that 2025 was going to be, major for Oando, going to be a struggle, and but that they went through that. That impact of even achieving the consolidation on the merger into one company was a major one. Now remember that these assets were being run by the IOECs, in this case NAOC. But remember they left because of problems in the shallow and on the lands. And of course, having done this acquisition, inherited those. Principally, remember the pipelines, the stealing of products, community challenges, and everything. And Oando has been able to work through that, increase the security over all their assets, and then engage the communities more, raise the necessary financing to enable them progress, and those have led to the results they have now.
So feeling a lot more bolstered and confident to move into the future. We also saw recently the release of the Leading with Energy Leadership documentary series. I'm afraid I haven't seen it yet, to say that. Yes. But that's why you're here. What core messages should investors and other stakeholders take from this?
I think there were three themes there. The first one had to do with the vision. Like talks about vision, that a lot of time that without the vision, you cannot even start a business. That the finance does not make the vision, So one talks about the fact that the business must always have ups and lows. You will go through crises, and those crises make you. And the third one focuses on legacy, building your legacy. You will see, in the Oando journey that I thought about in the last 30 years, that there's a segment of these in each of their operations. Even look at the finances, their financials, this one I just analyzed. The 2025 financial, remember I said, revenues fell by 21%. On the face of it, you would think that things are bad, but it was a strategic intent. It has to do with vision. It ties into the first one, which is vision. The crisis, ups and downs. Look at the assets they inherited, the issue of the community challenges, the issue of theft, and pipelines being broken. But they have been able to work on that and make sure that things are moving. And now they are building legacy. Now they have the assets. They're trying to sweat the assets to make sure that going forward, the investors and the owners of the business and all the stakeholders will profit from that.
So very reflective of the company's story in itself as well, mirroring that. I mean, you touched on, a few looking into the future for 2026, what to look out for. But let's speak specifically, quite briefly, about production targets as well, investment plans. Yeah.
We see, like, as I said, 2025 was spent on, trying to achieve the merger or the acquisition, and then clean up things outside operation. We see 2026 that the year will have the full benefit of the operatorship. Things are in place now, so they're going to run. 2025, they move production up to 32 by 32%. You will believe that 2026 will see more of that. In 2026 also, they're going to have the Fed drilling resume. They have 36 well program they have already started. That will continue in 2026. Angola block the exploration will start also, which they won also. They have a reserve-based lending financing, $3.5 million, which they got. That will support production growth in 2026. And then, of course, they have a hedge in place of about $59 per barrel to enable them to hedge against low price of oil. So 2026, we believe, is going to be a good year, that the shareholders, the various stakeholders will start smiling more to the bank.
All right, so it's safe to say, the future is quite bright for Oando PLC. It's always great to hear that news. If you joined us midway, I've been chatting with, as always, Arise Business Analyst Chika Mbonu. Mr. Chika, I want to thank you so much, and we'll see you again tomorrow, hopefully.
Thank you.